game of finger-pointing continues between the developers and Bank Negara, with property players saying they are not solely to blame for soaring property prices. REDA President Fateh Iskandar tells the Straits Times the higher prices are thanks to the rising cost of compliance with government regulations and levies on construction materials such as steel, which push up the price of component by more than 60%. And even with the heftier price tags, he claims that the association members are reporting shrinking margins, which are down to 15% this year. If you recall, developers have been calling on Bank Negara to loosen financing rules. But the central bank says slower sales are a simple issue of not having enough income and houses being too expensive. Maxis reported its highest quarterly profits in 5 years, supported by strong growth in its postpaid segment. Its third quarter earnings grew 10% to 554 million ringgit. Revenue increased by some 3% to 2.2 billion. It declared an interim dividend of 5 cents per share. CEO Morten Lundell says Maxis' postpaid delivered high on-year growth at 9.3%, mainly driven by a solid base of almost 2 million Maxis One plan customers. The segment recorded a revenue of 1.06 billion ringgit, with average revenue per user at 117 ringgit a month. Prepaid revenue, however, declined 6% to 955 million ringgit. This is due to an intense price war and lower revenue-generating subscription base due to SIM consolidation. Bursa Malaysia posted a 17% increase in its third quarter net profit, thanks to a rise in share trade and listing and issuer services income. Earnings stood at 51.6 million ringgit from about 44 million a year earlier. Revenue was also higher, climbing 9% to 130.3 million from 119.4 million in 2016. The bourse operator says it saw higher average daily trading value in its third quarter for on-market trades and direct business trades of 2.16 billion versus 1.88 billion a year earlier. Going forward, Bursa expects the performance of the securities market to remain stable towards the end of 2017, given the strong fundamentals of the Malaysian economy and equity market. It is anticipating an improved performance for the current financial year. Opposition lawmaker Tony Phua has dismissed PM Najib Razak's claims that 1MDB not only brought the country good, but is on track to realise a profit. The PJ Utara MP says the state fund is currently an empty shell, holding absolutely nothing but some 40 billion ringgit of debts. Najib made the claims on his blog yesterday. He also said that 1MDB had played a key role in solving the lopsided power deals signed by former leader, and that it had ultimately saved the country 200 billion ringgit over the next 20 years. In response, Phua says Malaysians have not enjoyed any benefits from this, as electricity tariffs have only increased since then. He also points out that 1MDB had lost billions thanks to the sale of its power assets to a China outfit. The fund had paid 12 billion ringgit for the assets and assumed 6 billion of debt. It sold them for 9.8 billion ringgit. The Ministry of Finance says EPF's overseas investment made up 29% or 759.78 billion ringgit of the retirement fund's total investment as at June this year. And out of these investments, less than 20% or 152 billion ringgit are invested in the US. However, MOF says in terms of ROE to EPF, the US portion, consolidated under the portfolio of overseas investment, gave a rate of return of 9.73% in 2016. It adds that EPF's exposure to US investments began since 2006. As for QUAP, it has invested 286 million ringgit in the US equity market since July, but there is no return yet as it is a new portfolio. It has, however, reaped returns of 6.72% for both asset class under private equity and global sukuk mandate in 2016. Neither LTAT nor Tabung Haji invest in either stocks or bonds in the States.